you need multiple layers of risk management, and you need a process. And also, I think you have to experience some kind of negative, really painful experience to really understand the value.
Welcome back, everybody, to Be the Trader. Today, I have a very special guest, a return guest, someone who's been trading for over 3 decades, has tons of experience. If you don't know already, if you don't know Scott, you need to go back to a previous episode where I interview him about his entire journey, and you get a lot of your questions answered. But today, we're going to be talking about pivotal moments that have really helped him change his trading career. And I'm going to be digging in some questions around there. So give him some time when he's got to think about the answers, because I'm going to be putting him on the spot. So Scott, welcome back to the show, my man. Thanks for being here, man.
Thanks for having me, Alex.
Absolutely. Absolutely. So, over 3 decades of experience in front of me. That's crazy. That's crazy, right? Can you think about that?
Yeah.
It's just amazing to me, first off, that I've had the opportunity to talk to you and be friends with you. It's pretty cool. And it's always good to get your perspective on things, because a lot of people, we get so narrow focused on the day to day and like, oh man, I've been doing this for a year, 2 years, 3 years, 4 years. And to you, that's nothing. That's nothing. It's all about perspective, really.
Right.
And so I want to ask you, first question is like, what was your most just horrific moment? Like the moment that was just like, oh, like it was just either horrific, it was just terrible, that really just sticks out. The first thing that pops in your head, and you're just like miserable.
It just has to be, and I think we talked about this on the last interview, but after I had such great success, when I came up with a strategy and back tested it and then worked on it and grew my account to a huge number, and I was over $1 million. And then after I lost almost all of that, and just the realization of it, I mean, you just feel like you're in a dark hole and you can't get out.
How did you get out of that?
I don't even know. I mean, it's not like it for me, it was hard. It's not like you can talk to other people. Like back then, the internet wasn't around really. I mean, at the beginning of it, and it's not like today. And it's like, who do you talk to, and who would even understand that? And I was just so hard on myself and disgusted in myself. And I thought I knew what risk management was. I thought I knew, how to control losses, but I really didn't. I mean, I knew it conceptually, but I didn't put it into practice. And then I really didn't know about the psychological part of it. So that has to be the one thing that sticks out, but it also propelled me going forward to where I am today.
So what was it that led up to that? Like, what was it? All in one trade? Was it multiple trades?
Well, we were talking earlier, you and I, about traders who just focus on one setup. And I was a long trader. It was mostly swing trades. I mean, they weren't long swing trades, maybe 2, 3, 4 days, most of them. But I was going long. It was a bull market, and never shorting. And the market changed, but I kept doing the same thing. And that's the problem about just trading one setup, is because if you're trading one setup and the market conditions change, well, the setups come in favor and go out of favor. Gap and craps work for a while and then they don't. So if you don't have the discipline and risk management in place to sit out those periods, if you're just trading one setup, well then you're going to go through what I went through, especially if you don't have the psychological elements and the risk management to go with it. So
when you said earlier as well, you said something about risk management, that you thought you knew risk management, but you really didn't have it. What do you mean? Like, what do you mean by that? At that time in your career?
Well, at that time, I thought risk management was just my risk management was I'm going to keep my money allocated between 10 stocks roughly, and that'll be my risk management. So they can't all go down, right? And then I thought, well, I'm going to have a stop, but once it broke a level, I would either go back in at another level, or I would ignore the stop and just out of emotion double down or something like that. So I thought I knew what risk management was, but I didn't really have the experience or the system and the rules in place to truly. I didn't. I mean, it really wasn't risk management. It's not as simple as that. You need multiple layers of risk management, and you need a process. And also, I think you have to experience some kind of negative, really painful experience to really understand the value of what risk management is.
So you said it helped you propel yourself forward as well. How long did it take you? Did you just start trading right after that, or what did you do to kind of like propel forward? What did you learn from that?
No, I stepped back from trading for a couple of years, and and then when I did get into it, I was very cautious and trepidatious, and then I went through a period of, what, I love trading. I'm gonna figure this out, and it was just a lot of trial and error. Just a lot of experimentation and trial and error. And I said, you know what, I'm going to keep trying different things until I figure this out.
Hmm. And speaking of trying different things, were you well before I go down that road? When you say trying different, actually, we will. When you say trying different things, what do you mean by that? Were you like starting to short as well, long? You're just trying to do everything? Were you trading the same size at that time when you were trading and lost that big amount of money that you mentioned?
Oh no, I downsized big time. And when I say try different things, I tried everything. Shorting, I did options, I did spreads, straddles, futures, forex, anything that moved. I would try. I tried Bollinger Bands, moving averages, patterns, you name it. I was trying everything.
Do you think that was helpful?
Um, I think it was. I think it's the same as back testing, but I was doing it like trial by fire. Um, I didn't back then. I didn't really have the know-how or the equipment to back test, and I didn't know anyone who was a trader who could explain to me, how to easily back test. So I just manually did it. I just did it. I kept trying different things, and eventually I'm like, well, this works and kind of works, and this kind of works, and just was going through this process.
Interesting. And what else would you say besides like your worst moment, right? What would you say is like the biggest moment that stands out that you were just like full of like happiness and joy? Was there a moment like that in your trading career?
Yeah, I would say that it was around somewhere around 2012, 2013. What happened was I went through this whole process of trying all these different strategies and methods, and found limited success. And then I would go on a boom and bust cycle. I'd have a period of good results, and then I go back. And I got to this point where um, I felt like, you know what, I can't beat the market. Um, whatever my success was in the past, I'm like, maybe that was just fluke. Maybe that was just luck. Um, but if I can't beat it, I love trading. I decided I'm going to trade for the rest of my life, regardless. And I'm like, well, if I'm going to trade the rest of my life, then I have to be able not to lose money. So that became my goal, is not to lose money. And then I'm like, well, I want to trade the way I think I should trade, but not get hurt. So I'll just trade small. So the goal became not to lose and just to trade correctly the way I thought. And the amazing thing is that's when I started making money. It's counterintuitive. So it goes against, your natural gut instinct, like if you want to make money, you need to press, you need to take risk. And what I found is, like, when I took less risk and didn't care as much about making big gains, I became consistent.
Why do you think that is?
Um, I think because we're human, and um, at least for me, I think most people, I think the psychological element of it really has a big impact on your trading, even when you're not realizing it. And when you remove your emotions, so by focusing on the risk more and not losing, and trading smaller, all of a sudden your head becomes clear, and you can actually make good decisions, more good decisions than not. And I just think it comes down to that.
That's a good point. I've experienced that now myself, where I just like downsize, and it helps you see things clearer and make decisions without that emotion, right? So I agree with you 100%. I'm glad you shared that, because a lot of people are probably experiencing something like this, where they're just like, I feel like I can do this, but I just keep making little mistakes here and there. And if you're someone like that, you need to go back and rewind what Scott just said and try to implement that very much. I think you'll see some results right away when you do that. I'm not saying you're going to blow up, but results in period. You'll see some type of results. I wanted to ask you this. So, what really helped you hone in on risk management? Was there a moment in your trading career like, this is risk management? And what was it?
Um, yeah, I can't remember exactly when it happened, but it's when I started implementing my current set of rules, which is basically I have a max daily loss, I have a max loss per ticker, and then that max loss per ticker is like my allowance on that stock. And then, depending on the trade, I'll decide how I want to use that allowance
Mm.
on the trade, and divide it into bullets. So maybe it's 5 bullets, and I'm like, well, let's say there's 3 levels that I like, and my ultimate stop is going to be at the third level. So basically, if it comes up to the first level, I'm only going to use one of those 3 bullets. But if it gets to the second, I can use two. It depends. You still have to analyze the trade. And if it gets to the third and I'm right near my stop, I'll use the last one maybe. And that keeps me safe most of the time. It keeps me out of trouble, and I give myself lots of wiggle room, as you know. And you still get stopped sometimes, but I make it very difficult to get stopped out. Put it
You
that
know,
way.
that's a couple of things stand out to me. The first one is, you talk about, I may add at the second level, I may act to the third level. It depends. I'm always evaluating. Can you explain what that means? Because a lot of people will just draw their levels or want to short somewhere, and just every time it hits their short, what do you mean by I may and I'll evaluate?
Because in my method, I use mainly horizontal and angled trend lines. And I also analyze price action when it gets to my lines. That's my primary way of trading. So depending on the behavior of the price, when I envision what a stock might do in the morning when I'm making my plans, um, I make a map of what I think the stock might do. When it gets to those levels or those lines, I'm watching how price is reacting. So just because I have a level and it gets to a line, maybe it's starting to pick up tremendous volume and momentum. and I don't want to step in front of it. So I'm gonna wait. I'm gonna back off and be more cautious. So that's what I mean by may.
Mm.
Um, so I'm always reanalyzing. You have a vision of how you think a stock's going to trade during a day, and then as it unfolds, you kind of recognize whether it's unfolding the way you envision.
You talk about vision. You have a vision where a stock may do. Can you elaborate on that? Were you always thinking that way, or is that something that has helped you throughout your career? Like you kind of changed to think that way?
Um, no, I don't think so. I think when you get when you get hundreds and then thousands of hours of screen time, um, you see the same. You see that price behavior act similar. Um, and you see the same patterns repeat themselves. So you get to the point where you start the day and you kind of see how a stock is setting up for the day, and you can kind of visualize what, based on your past experience, what you think it's going to do.
Mm. And you also said something also about the idea of you have a max loss, you have a max loss per ticker, then you divide your bullets. Can you elaborate a little bit of what you mean by that? Because some people may hear that and kind of just like glaze over it, but I think that's a very important part of how you manage risk.
Yeah, let's say as an example, you have a $30,000 account, so you're over PDT, and let's say you're trading with, we'll say you're using the 1% rule. I'll often allow myself go to 2%, but let's say you're using the 1% rule. That means that um, you should probably not risk more than $300 on each trade that you do, because 1% of 30,000 is $300, right? So then that $300 is your max allowed loss on that ticker. And then let's say you're shorting something and it is $8 a share, and you think at $10 it's a stop. But you see a level at 8, you see a level at 9, you see a level right near 10. So you have to take that $300 and maybe divide it into three bullets. Would be $100 for each bullet, meaning each level that you're attacking. And the thing is, as you get closer to your stop, you automatically will increase your share size, because instead of, at $8 you're $2 away from your stop, at $9 you're $1 away, and at 9.90 you're 10 cents away. So as you get closer to where you're going to stop out, your share size increases, but not your dollar risk. Your dollar risk remains still $100 each.
Mm.
So hopefully I made that clear.
No, you did. You did. I just want people to understand how you see that, because I think it's important how you manage your risk. You don't just say 1% and then say I'm going to get all in on one bullet. Sometimes you will, it depends,
Well,
but
sometimes, yeah, sometimes you do.
it also depends on the setup, right?
It does. And also another thing I do is I decide whether I am going to be uh, loose, or what I call wide risk for an entry, or tight risk.
Mm.
And it depends on how the stock trades. Some stocks are very controlled and tight with how they trade, but some of these small caps can wick up and
Mm.
down all over the place. So you might need to have wider risk on those. But if you're trading like GE or Ford, you can have real tight risk. So it depends on the character of the stock.
I'm curious on something else too. I want to know, what is there something you do that has helped you with this emotional roller coaster of trading? Like, is there anything that you do that helps you always get center, always get focused, be able to attack the next day, maybe forget about the previous day? Is there anything you do to help you do that?
Honestly, not really, not like meditation or anything like that. But I think just going through the same process and routine every day, doing the same thing over and over again, it just, no matter what happened the day before, it just becomes uh, I don't know how to explain it. It just becomes a matter of routine, and you just go on. You just keep doing the same thing that's been working for you.
That reminds me of like professional athletes, golfers. Like they have a routine before they get to hit the ball, before they, shoot the ball, before they throw that pass. Like they have a routine of what they're going to do right before they actually do an action. And so, what is your routine? Because you were talking about how, it's your routine. You're just doing the same thing every day. Like, is there a certain routine you do that if you don't do, you feel kind of off balance?
Yeah, and it's nothing special. It's just the routine is. Uh, I usually sit down before 8 a.m. Market time, and I have checklists that I just instinctually do. I make a watch list. I check all the top stocks, the movers, check the earnings. I check yesterday's watch list, create today's watch list. Then I start highlighting the stocks that I'm most interested in, and then one by one, I walk each chart down from higher time frame to lower time frame.
Hmm.
And I have a small trading community, so I'll write out my thoughts and my watch list and my ideas, and then I make my trading plans and get ready for 9:30 because that's game time. So it's just that routine. That's all.
Yeah, he makes it sound like it's nothing, but I want you guys to listen to this and rewind it because it's a lot, and it's really important. I think a couple of things that stand out to me. Number one is going back to his previous watch list to see if there's anything else that should bring onto his new watch list. Drawing out his lines, making sure that it's something that he's interested in, highlighting the most important ones that he wants to focus on, so that we don't miss the great opportunities because you're focused on something that's kind of eh. So I think it's really important that you highlighted on that, Scott. And I also wanted to ask you, is there a time where did you just like jump your size, or how did you progressively grow your size? Was there a method to that, or is it just like I'm making $100 now, I'm making 10, like was there like a method, or what was it?
Well, from the old days, when I had a lot of big success and then failure, I would jump very quickly, and sometimes I would just dive in. I would just be so sure of a particular setup or a stock, I would just plunge. But now, what I do now is just very slow, and now I'm to a level where I'm kind of comfortable where I'm at. So um, I still do size up, but it's very slow. Like I might only move, 10%. What I mean by that is like um, let's say someone has a $30,000 account and it's grown to 35,000. Well, maybe going forward, you would just increase your risk per ticker by that extra 5,000. Maybe throw another $50 of risk on each ticker. So it's very gradual. It's very slow, and I'm not trying to you know make $10 million tomorrow. I'm happy. Just there's also a psychological element to it because I notice that if I move up too quickly, I become uncomfortable. It's just seeing the dollar amount change on your P&L. And if I feel uncomfortable, I move back.
Do you watch your P&L while you trade?
I recommend that you don't, but I've gotten to a point. I did remove P&L completely and not look at it till the end of the day, which helped tremendous. That was a big turning point, by the way. When I did that, it really helped my trading. But I'm to the point now where I can look at it and it doesn't affect me because I don't know how to explain
I
that,
mean, you've
but
been trading for 30 plus years. I think
yeah, yeah, I don't care. Like if I'm up or down, it doesn't matter. But you got to get to that point, I think, where it doesn't matter. You can't feel, especially when you're down, when you have unrealized losses, you can't feel anything about it. And if you're feeling something, that's bad, and you should. And in my opinion, you shouldn't.
You said you took it away yourself at the beginning, or sometime down the line in your career, you took away P&L until the end of the day, and that really helped you. Is that something you like? Why do you think that it is? Like, why do you think that helped you a lot?
I think it goes back to there's a point in my progress where I stopped trying to go for the home runs and I downsized and I just focused on um, not losing money and just trading correctly and not worrying about making big P&L. And I think it just goes back to removing emotion. Emotions play with our psychology and they cloud our thinking. Because isn't it funny when you go back and you look at the end of the day, you look at how the chart unfolded and you're like, oh, it's so obvious. But when you're in the trading and you have money on the line and your emotions are involved, it doesn't seem obvious, but at the end of the day, it seems real obvious. So I
Yeah.
think it just comes down to just natural human emotion.
You also mentioned that you are now at a point where it doesn't bother you, and you got to be at a point. You said it's good to be at a point where you're not like really upset about losses or gains or like super excited. Like, how do you celebrate then? What do you celebrate? Like, do you celebrate anything? Because that could be kind of, as someone who is pursuing a career of trading, might sound weird because they're like, I want to celebrate my wins. I want to, how do you celebrate trading? Because you don't want to get too emotional, you said, which I'm very curious how you control that, or how do you maintain that?
Well, in the past, I would celebrate by treating myself, spending money, whatever, taking my wife out to a nice dinner or something. But um, whenever now, what I found is that when that happened, that would lead to losses because I would get loose with my risk. I'd get giddy, and that also clouds my thinking. So now it sounds strange, but I don't celebrate. I mean, if I have a great day, I just feel good inside that I traded correctly. And this day was really just accumulation of the process and rules and system I have in place all along. It's not like I don't think there's any reason to celebrate. You're just doing it's just happening the way it should happen. That's all. And you're going to have every once in a while a great day. And then you're going to have a lot of mediocre days. And then you're going to have some losing days. It's just the way it is. So I just don't believe in the concept of celebrating anymore.
Mm, that's a good point. I think there's something that you do as well, though. I know that I have the benefit of talking to you almost every other day, or pretty much sometimes every day. But what I've noticed is you also acknowledge that if you're feeling giddy, that you'll downsize the next day.
Oh, yeah, I forgot about that. Yeah, actually, I do. You're right. Um, yeah, actually, you're right. It's a warning sign. You're right. Usually, I'm on guard.
That's
Uh,
interesting to me because like most people don't. They just push more, you know?
yes, and that's what I used to do. I would push more, and you're right. It's instinctual now. Like just internal. It's internalized. Like now, I start to associate a good day with pain because of my past. So if I have a good day, yeah, you're right. The next day, I might even hesitate to trade, or I'll trade, with smaller bullets. Yeah.
That's smart. I think that's smart. I think it's something that I'm going to be implementing as well because as I grow, I think it's just really important because when you have good days, you're excited. And though that emotion can really cloud your judgment, just like bad emotions can, and fear.
Yeah.
But
In my little trading room, I have guys that rate me. A lot of times they want to tell me they had a great day. And I always, respond to them like, okay, but don't get cocky. Like, don't make some dumb mistakes tomorrow. Like you gotta chill out.
is there a rule? Because I know you have your own rules you mentioned. Is there a rule that you didn't have before, like a while, whatever time in your career that you implemented and created that really helped you in your trading?
Um, could you repeat the question? I don't think I
Sure.
got it.
Do you have like one rule in your trading rules that have really helped you in your trading, like that you implemented at some point in your trading career?
Um, I mean, I have a lot of rules.
Right, but is there one that like stands out?
Um, yeah. And I think a lot of newer traders don't get this part of it, but I have this trading clock that I live by, and I think it's so important to how I trade. 9:30, I expect a certain kind of behavior. I have this theory that the best setups for me are found, best entries of the day are found around 9:30 and 10 o'clock. Not exactly, but in that time range. Also, I think that a lot of stocks that have momentum and moves start to lose momentum and could reverse around 11 o'clock to 12 o'clock. And from 12 to about 1:30, I try not to trade. I try to avoid the choppy, market. So, and I still have to remind myself of that every day. Because my instinct is to keep trading all day. But that really that was a big, a big rule change for me. Just and also once I learned that through trading, it took a while to implement that because I just if I see a setup, I just want to trade it regardless of what time it is. But I've
Mm.
learned over the years that you can't do that. So I think that's really important to me.
That's awesome. I appreciate you sharing that with everyone. If you didn't hear what you just said and you just gloss over it, you need to rewind this. And I know if you're enjoying this, you need to be sharing this with your other traders because he's dropping down some great knowledge that I know you can help out by sharing it with others. But real quick, Scott, I want to ask you this too, though. Is there something that you do in terms of journaling that really helps you progress or at least keep your edge?
Um, I mean, I think the most important part about journaling for me is recognizing and being conscious of my mistakes because this I equate trading to similar to being a pro performance athlete, and just like athletes, like they're always most of the work is done off the field, not
Mm.
on the field. The teams that win championships, I believe the winning is all done when they're not playing. These guys train, and learn and have coaches, and then after the game, they go back and they watch the replays of the game, and they pick out every little mistake. So I think the process of reviewing your charts and that's what I do every day. Review my charts with all the prints, make annotations, think out the logic of what I was doing, why I did it, and then also I have a mistake journal where I'm writing down, every mistake I wrote, and I carry that into the next trading day.
Nice, nice. And you I know you read quite a bit actually. And in terms of books that stand out to you that have really helped you, maybe they didn't help you because maybe they did, maybe they didn't, but maybe if it didn't help you in your trading, maybe it helped cemented some ideas, or it was just a really good trading book. Is there any book like that that stands out?
Oh my God! I mean, I've read. You're right. I've read a lot of books, and I think I've read. Well, I
Every
didn't read
book.
every trading book, but I've read hundreds. And I think that's where I learned to trade mostly because the internet wasn't really a thing when I started trading. So I would go to every library in the area and check out every trading book there was. And it's just a habit I got into, and I still do that. I still love reading them. Um, and honestly, I don't think there is one that. Sorry, guys, that stands out. Um, I mean,
What about a
Market
couple?
Wizards. Yeah, Market Wizards was a big one. Just to show that there's all different kinds of ways of trading. All different traders, personalities. There was a couple books by Larry Williams, who was big time. Well, he's still a big time trader, but a very good trader when I was learning how to trade. And he just talked about how systemized. That's what I got out of it. How systemized his trading was, and that even though we're discretionary traders, the successful traders are very rigid in their methods and rules and systems and risk management.
Mm.
You can be a discretionary trader, but I think that you need to have structure at the same time.
Speaking of that, before we start to wrap this up, I wanted to ask you this because you kind of brought this up during that answer. You got to be rigid. Would you say you got to be rigid and loose, or just completely strict?
Yeah, it's counterintuitive. It's kind of hard to explain, but you need to be rigid and have a framework to work within. But as far as trading, I think you need to be very open-minded and very flexible. So it's like an oxymoron. It doesn't sound right. Well, what do you mean you have to be rigid and flexible? Well, you do. You need to be rigid with your risk rules. You need to be rigid with the type of setups you look for. But as far as being open-minded during your trading, you need to be flexible.
I think that's one of the hardest things to learn. I think it's so hard to learn. I think that's one of my pivotal moments, and I'm like not being so rigid in everything, black and white in everything. That's how I used to be, and you nailed it on the head. It's like you got to be flexible, maybe rigid on your rules, like you say, or you're cutting your losses. But other than that, like you got to be flexible so you can continue to adapt because the market's always changing. So like if you're not flexible, you may not change with it.
That's right.
Well, look, Scott, if someone wants to learn more about you, have any questions, and by the way, if you're curious on more about Scott, you need to go listen to the previous interview where we talked all about his journey, so you can get more insight on that. But if they want to know, maybe reach out, learn more about you, how can they do that, Scott?
The best way is to hit me up on Twitter at Switterman. It's Switterman.
Nice. And he's being modest here, but he also has a YouTube channel called V Traders. So check him out there where he provides some content because I'm gonna get on him. He's gonna provide more because of this episode.
I'll do more.
He's gonna provide more content because he provides some very, very solid content and just share everything that you can do for the community to improve for the better. So thanks again, Scott. Appreciate you being here. It's always a pleasure.
Thanks, Alex.